Be Wealthy and Smart, episode 1235.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to look at which goods and services are causing inflation. As you know, we got some semi-good news about inflation, and that was that the Consumer Price Index for July rose only 3.2% year over year, according to the Bureau of Labor Statistics. That was higher than the 3% that we saw in June, and it was also the first rise in inflation we'd seen in 13 months, because prior to that, it had been coming down every single month. And on a monthly basis, the CPI rose 0.2% last month, or the same rate that we saw in June. So that's good. It's holding the line. It's not getting worse when you look at it at an individual month level. But importantly, when you look at core CPI, which includes volatile food and energy prices, it posted its smallest back-to-back monthly increase in 2 years. And July's core CPI rose 0.2% after rising also 0.2% in June. So it looks like inflation is somewhat leveling out. Still on the decline, even though we had 1 month a little bit higher, we could still resume a downward trend. On an annual basis, core CPI increased 4.7%, and that's still too high according to what the Federal Reserve wants because they have a 2% target. And as long as inflation is above 2%, interest rate hikes could be on the table. And that's what they're doing in Jackson Hole this week, is discussing what are their future plans for interest rates. According to Philip Colmar, a managing partner and global strategist at MRB Partners, he said the bulk of the decline in U.S. headline inflation is over, but core consumer price inflation should continue to erode in the coming months. However, there is almost no chance that core inflation will fall back near the central bank's 2% target absent a recession. Well, I would disagree with that. I would say absent a recession or maybe a black swan event. There's lots of different things out there on the horizon that could happen, including a commercial real estate crisis, problems in China, the war in Ukraine, credit markets overseas having problems, bank failures in Europe. There's all kinds of things that could cause a black swan event, which would impact our markets here. And I've been saying for a while, I think October looks like the month where something may come in and cause a steeper decline than what we've had in August. So inflation is still causing problems. And when we look back in history, between the year 2000 and 2020, annual inflation in the U.S. averaged just 2.1%. But right now we have some goods and services that are causing inflationary problems. One of the main contributors to inflation in July was housing. It rose 0.4% last month and 7.7% year over year. Food prices also rose 0.2% in July, accelerating from a 0.1% increase in June. On an annual basis, food inflation rose 4.9% in July, driven by a 7.1% increase in food away from home and a 3.6% rise in prices for food at home. Also, the index for cereals and bakery products rose 7% over the 12 months ending in July. Dairy and related products saw prices rise 1.3% over the past year, while non-alcoholic beverages became 5.4% more expensive. And restaurant meals also got pricier, rising 7.1% over the past year. Transportation also increased as prices rose 9% over the past 12 months. But where inflation got better was energy prices tumbled 12.5% on an annual basis. And that was because in the prior year, we had Russia's invasion of Ukraine, which caused energy prices to spike. Gas prices fell 19.9% over the past 12 months, while fuel oil plunged 26.5%. Prices for new vehicles were down 0.1% in July versus the prior month, and used car and truck prices fell 1.3% in July after slipping 0.5% in June. And over the past 12 months, used car and truck prices have come down 5.6%. So as you can see, inflation was primarily driven by higher costs for shelter and food. And we're happy to see those upward pressures are beginning to ease. Sarah House, senior economist at Wells Fargo Economics, said inflation in the United States remains on a downward trajectory. Over the past 3 months, the core CPI has increased at a 3.1% annualized rate, the slowest pace since September of 2021. Well, hopefully prices will continue to move in the right direction, but we're still a ways off from the 2% target that the Fed is looking for. Will they continue to raise rates, or will a black swan or a recession come in to help get prices back in line? That remains to be seen. But I'm not seeing evidence of a recession at this time. Growth has still been steady, employment is strong, so if anything were to bring down inflation, I would think it would be from a black swan, something out of the ordinary that may happen in October. But I still am looking for lower interest rates at the end of the year and into next year. If you haven't yet subscribed to Be Wealthy and Smart, hit the subscribe button and you'll be notified as soon as new podcasts are available. And all of my podcasts are in my wealth mentoring library on my website at lindapjones.com/podcasts. And while you're there, sign up for my weekly newsletter for more wealth tips. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.